Hi, everybody. Welcome to another video. We are going to talk about debits and credits. I'm just going to give you a short mini lecture on debits and credits. If you are in the online class, then you would have read about this and studied it in your book. If you are in the face-to-face class, you probably had this lecture in its full format in class. So, and by the way, this is Adele Foltz, your professor for Accounting 1. So let's just talk about debits and credits. The first thing that I like to talk about, we're going to work on this problem, but after I give you this little mini lecture. So I always like to talk about 3 rules of debits and credits. Okay, so you probably did some work already where we talked about transactions and the effect on the accounting equation, but we did it in English. We talked about transactions that made assets, liabilities, or stockholders' equity go up or down. So we did it in English. That was probably fairly simple for you once you got the hang of it. And now what we want to do is translate those increases and decreases in our assets, liabilities, and equity accounts into accounting language, which is the language of debits and credits. So let's talk about the first, let's talk about the 3 rules of debits and credits first. So rule number 1 is that debits are always on the left. And credits are always on the right. Okay, so what do I mean by that? Sometimes we will be writing out journal entries, and if we need to debit an account, we might, well, let's say debit cash for $1,000 and credit sales revenue. We'll talk more about these. I'm just giving you an example of the account that we're debiting starts here on the left, and so is the number, the amount on the left. The credit is indented to the right, and so is the amount indented to the right. So debits are always on the left, and credits are always on the right. If we are working with T accounts, which we will do, and again, we'll explain more about that later. Let's say it's the cash account. If we are debiting cash, we're going to write it on the left because debits are always on the left and credits are always on the right. So that is rule number 1 of debits and credits. Rule number 2 is that you have to have at least one of each. So up here in this example, I had 1 debit and 1 credit. It doesn't mean you have only one of each. It just says you have at least one of each, at least 1 debit and 1 credit. You may have 2 debits and 1 credit. You may have 1 debit and 10 credits because rule number 3 says no matter how many debits and credits you have, as long as you have 1 of each, the total, when we add up the total of all debits, must equal the total of all credits. So, for example, let's follow all 3 of these rules. Let's say that we want to write a journal entry where the owner contributed cash of $10,000 and equipment of $20,000 in exchange in the company and contributed them into the company in exchange for common stock. So now we've done this type of problem in English. And what we said was that in our accounting equation, we said we have an asset, cash, that went up by 10,000. We have another asset, equipment, and that went up by 20,000. And our owner's equity, we have 4 items. We have our common stock, our revenue, our expense, and our dividends. And our common stock went up by a total of 30,000. And our accounting equation stayed in balance. 30,000 equals 30,000. If we were going to write a journal entry, and again, we're going to do a lot of these, so I just want to give you this short demo here. When we write our journal entries, remember, debits are always on the left, credits are always on the right. We have to have at least one of each, and the total of all of our debits must equal the total of all of our credits. So what do I mean by that? Well, our cash increased, so we're going to debit cash by 10,000. And our equipment also increased, so we're going to debit it 20,000. And our common stock increased by 30,000. Now we'll talk about whether debits or credits increase or decrease accounts here in a moment. But what you can see is that in my journal entry, of course, we'd always have a date and we'd always have a description. This would be to record investment, owner investment of cash and equipment in exchange for common stock. So let's see if we followed our 3 rules. Number 1, debits always on the left. That includes both the account names, cash and equipment. Both of those are written here on the left. And our amounts are also over here on the left. Our credit, we're crediting common stock. Notice we started it over here on the right, so it's indented, and our amount is also over here on the right. So, so we have followed rule number 1. Rule number 2 says we must have at least one of each, at least one debit and one credit. Well, we followed that rule because we have 2 debits and we have 1 credit. So we have at least one of each. We followed that rule. So let's take a look at rule number 3. Rule number 3 says no matter how many debits and credits you have, when you add them up, if we add up our debits, they equal 30,000. They have to equal the total of our credits. And they do. So we have followed all 3 rules of debits and credits. Okay, so let's talk about the behavior of our account balances with debits and credits. So if we have assets equal liabilities plus owner's equity, and in owner's equity we have common stock, we have revenue, we have expense, and we have dividends. Okay. So the way I'm going to show this to you is shown in various ways in textbooks. I don't really think that anyone shows it quite the way I do, but it has always seemed to work for my students, so it's the way I'm going to show it to you. Okay, so if we draw an imaginary line here by our equal sign, All of our assets here are on the left side of that equal sign. They're on the left, right? Doesn't matter which asset it is, whether it's cash or accounts receivable or inventory or supplies, all assets fall here on the left side of the accounting equation. Anything that falls on the left side of the accounting equation goes up with the thing that's always on the left, which we know is a debit. So all assets will go up with a debit, and therefore they will go down with a credit. Okay, this is how I like to think of things. Now, so it doesn't matter whether you have one asset, two assets, or 10,000 assets. They all go up with a debit and down with a credit. Assets appear on the left side of the equal sign, so they're going to go up with a debit because debits are on the left. Okay, so now let's take a look at the right side of the equal sign. So liabilities appear on the right side of this equal sign. Well, if it appears on the right side of the equal sign, then it's going to increase with the thing that's always on the right, which is a credit. And therefore, it will decrease with a debit. So once again, it doesn't matter what liability it is, whether it's accounts payable, salaries payable, rent payable, unearned revenue, notes payable. If it's a liability, liabilities appear on the right side of the equal sign, so therefore they're going to go up with the thing that's always on the right, which is a credit, and therefore down with a debit. Now, when we come over here to owner's equity, we have to actually ask a second question. So owner's equity here is on the right side of the equation. No question about that. It's on the right side of the equal sign. So owner's equity will always go up with the thing that's on the right, which is a credit. Credits appear on the right, debits are on the left. So it will always go up with a credit and therefore down with a debit. Okay. So what we have to be careful of is when we're talking about common stock revenue, expense, or dividends, we have to think about what effect do these things have on owner's equity. So if common stock increases, when common stock increases, owner's equity goes up. So then we have to say, well, how do we make owner's equity go up? We make owner's equity go up with a credit. So let me say that again. Common stock, when it goes up, owner's equity also goes up. So we make owner's equity go up with a credit. Owner's equity is on the right side, so we make it go up with a credit and down with a debit. All right, let's talk about revenue. When revenues increase, owner's equity also increases. And how do we make owner's equity go up? Well, owner's equity is on the right, so we make it go up with a credit. So when revenue goes up, owner's equity goes up, so we make it go up with a credit. Therefore, these things go down with a debit. All right, let's talk about expenses and dividends. Well, when revenue increases, if that makes owner's equity go up, then if expenses increase, owner's equity goes down. So if owner's equity goes down, how do we make owner's equity go down? With a debit. So when expenses go up, owner's equity goes down. We make owner's equity go down with a debit. So therefore, expenses will go down with a credit, the opposite. Let's talk about dividends. Dividends are the same way. If dividends increase, remember, dividends are when we give money or property back to our stockholders. So when they give us money, common stock increases and owner's equity increases. When we give it back to them in the form of a dividend, when dividends increase, owner's equity decreases, right? We give money or property back to them, so our owner's equity decreases. So dividends go up, that makes owner's equity go down. How do we make owner's equity go down? We make it go down with a debit. So therefore, if we want dividends to go down, we'll do it with a credit. All right, so you have to absolutely know the accounting equation and how debits and credits make these assets, liabilities, and owner equity accounts go up or down. Now, there's one other thing I want to talk about, and that is normal balances. So normal balances, very, very simple. It just means whatever makes the account increase. Okay, so what makes the account increase? So once again, if we're talking about an asset, assets are on the left side of the equal sign, so they go up with the thing that's always on the left. Assets increase with the thing that's always on the left, which is a debit. So that also is its normal balance. That's its normal balance. If we talk about liabilities, and again, doesn't matter which liability account it is, liabilities are on the right side of the equal sign. Anything on the right side increases with the thing that's always on the right, which is a credit. So the normal balance of every liability is a credit because credits make it increase. Okay, so now, once again, we're talking about our equity accounts. And we have common stock. When common stock increases, owner's equity increases. How do we increase owner's equity? With a credit. So that is its normal balance. Common stock has a normal balance of a credit. Again, it's whatever increases the balance, the account balance. Okay, revenue. When revenue increases, owner's equity increases. How do we increase owner's equity? Increase it with a credit. So to increase revenue, use a credit. And so the normal balance of a revenue is a credit balance because credits make it go up. If we are talking about an expense account, if our expenses go up, our owner's equity goes down. How do we make owner's equity go down? We make owner's equity go down with a debit. So expenses go up with a debit. That's its normal balance. The normal balance of every expense is what makes it go up. Every expense has a normal balance of a debit. Again, why? Because it has a normal balance of a debit, because debits make the expenses go up, and that makes owner's equity go down, and owner's equity goes down with a debit. Dividends. When dividends go up, owner's equity goes down. How do we make owner's equity go down? With a debit. Owner's equity is on the right, so it will go up with a credit and down with a debit. So the normal balance of our dividend account is a debit balance. Okay, so we are done with just a mini lecture on debits and credits. The best thing you can do is just practice this to no end. In your course, I will have posted a debit and credit quizzer. And what you should be doing is practicing that quizzer. It randomly selects 20 questions out of 60. And your goal is to get 18 to 20%, not 20%, 18 to 20. It's going to choose 20 questions. And your goal is to get 18 to 20 correct. Ultimately, you want to be able to do that in 3 minutes or less. Now, you're not going to get to it in 3 minutes or less unless you're guessing and just happen to guess correctly right off the bat. Most of the time, you're going to take more time than 3 minutes, but the goal, your first goal, should be to get 18 to 20 correct, no matter how long it takes. Okay? And then once you start getting 18 to 20 correct, kind of thinking through debits and credits, then start shaving off time. If it took you 10 minutes to do it, try and do it in 8. Then try and do it in 6. And then ultimately, if you can do it in 3 minutes or less, then you're really on your way to making accounting very, very easy. What you really want to do is have it be muscle memory of sorts, right? So I always say to students, think about it in terms of, think about when you were first learning to drive a car, right? And when you're first learning to drive a car, you have to think about every step along the way, right? So you sit in the car and you think, okay, put my seatbelt on, 2 hands on the wheel, put my foot on the brake is on the left. Okay, let's shift the car into reverse because I want to back out of the driveway. I don't want to put it in drive or I'm going to hit the garage door. So I want to put it in reverse. You're looking at the gear shift. You see it's in reverse. Then you take your foot off the brake and you're thinking about this the whole time. Well, after you do it for a while, you no longer think about those things. You just do them. They become muscle memory. You get in the car, you put your seatbelt on. You're not even thinking about it. You put your hands on your wheel, you put your foot on the brake. You know the brake's on the left. You don't have to think, okay, my gas is on the right and my brake is on the left. You just do it. And then, you're probably not even looking at the gear shift. You shift it into reverse without even looking at it. And then you back out the driveway by putting your foot on the gas and depressing the gas pedal. So again, all of those things, when you're first learning to drive, you have to think about every step of the way. Eventually, you just do it on muscle memory. That's exactly where you want to get to with your debits and credits. And when you do, accounting becomes very easy. So let's try and get there. And I'm going to conclude this video before, so you can watch this, or if you got it in class and you feel like you have it, you don't have to watch this video. You can just go right to the problem that we're going to do. So thanks for watching. I hope it helps. And practice that debit and credit quizzer because it will make all the difference in the world. All right. Thank you.